Hi, I'm Trevor Austin, founder of Authentic Life Financial Planning. In this video, we're diving into Equity Comp Taxation 101. All right, let's talk about equity comp and how it's taxed. Now, this is going to be pretty quick. I'm not going to go line by line, box by box through this because there's a lot of information on this chart. Main thing to know is that when it comes to restricted stock and non-qualified stock options, when those shares either vest or are exercised, they are taxed as compensation income. What that means is that you're going to pay federal tax, state tax if it applies, local tax if it applies, and you'll also pay Social Security and Medicare. So 5 different taxes just on one vest or one exercise of your RSUs or non-qualified stock options, respectively. Now that's just when they vest, when they exercise. That's not at the time of sale. That's different. If you sell at the same time, then there really is no additional tax consequence. It all just is based on the vesting, based on the exercise. But if you do end up holding those shares and then selling at some point in the future, then that growth is taxed as either a short-term gain or a long-term gain, depending on how long that stock has been held. The general rule is that as long as it's been held more than 1 year, it then qualifies for those preferential long-term capital gains rates. With ISOs, I'm not going to cover that here. ISOs are a mess, frankly, and they require a lot of detail and knowledge. So we're going to cover that in a separate slide shortly here. But I will talk about ESPPs briefly. The biggest thing to know with ESPPs is that the discount, assuming it's a qualified ESPP plan, so a qualified employee stock purchase plan, that discount is taxable as compensation income, just like the RSU vest or the non-qualified stock option exercise. It's taxed as compensation income. So again, Fed, state, local, Social Security, Medicare may all apply depending on where you live and what sort of income you have. After that, it's either taxed as a long-term capital gain or it's taxed as compensation income, depending on how long you've held the shares. Thanks for watching. If you found this video helpful, please like, subscribe, and drop a comment below with any questions or topics that you would like to see covered. Financial planning is all about creating the life you want. Let's build it together.